said somebody wrote in a group, and I am not in any chat room.
Go up in the messages. You'll see the link to the chat.
Okay, sorry. Okay, thank you.
No problem. Anyway, folks, one thing I want to make clear is I would like you all. See, this is going to last 4 weeks, all right? And it's going to happen, and it's going to end, and life will move on. So you can either make use of it, all right, or you can simply just enjoy the show, all right? You can either become a better analyst and or trader thanks to this group, or you can just be a participant, right? There's always, in any group of people partaking in a group activity, there's always participants, which is the most, and there's winners, all right? So I would like a higher percentage than normal of you to benefit from it, right? That is my wish, and the rest, aka the work, is up to you, all right? Because for me, it's not just about the participants' money and the subscribers count, right? It's more about the impact. Is it reaching a lot of people? Are people benefiting from it or not? That's what matters more to me, right? So let's get started. Get out your coffees or your coffee, right? Set everything aside and enjoy the show. 130 participants out of 500, so I'm hoping at least there's a bunch of you who are recording, right? So let's get right into it. Can you see the screen?
No.
Also,
Share screen. Can you see the screen now?
No?
How about now?
Yes, it's okay right now.
Stop sharing.
yes.
Start recording. Share screen. You see now?
Yes.
Huh? All right. Well, let's get started. We're going to have euro. All right. So we go to the monthly. As we know, we want to do a top-down analysis, meaning we start from the higher time frame and move down into the lower time frame. Excuse this, FVG, for my use. So monthly. On the monthly, we've hit an important liquidity pool, which was pointed out to you earlier, right? Which is this one right here. This had been pointed out from the top. Exactly. So 700 pips ago, I had warned everyone that euro is going to be drawn to these lows, and we have reached And as we know, when we reach a higher time frame liquidity pool, or when we hit a higher time frame objective, then we can expect some chop, right? That is for certain. So when we hit a higher time frame liquidity pool, then you can guarantee some sort of chop, right? Continued by a reversal or a retracement. So we've hit the liquidity pool, so we can expect at least to trade back. Of course, let's go back in with a good old hindsight bar replay, right? Because all we do is hindsight around here. So we go behind. So this is how the previous week's candle closed. Now, what do you see?
Looks like a bullish rejection candle.
Now, for those of you who studied anything other than ICT, right? This is a doji, right? In classical price action, right? A doji candle indicates a reversal, right? Especially when paired with a support level. So this candle alone, by its shape, you can expect some sort of rally in the next candle, and this happens also in the opposite shape, right? When you see a bearish doji, then you can expect a bearish continuation, right? A long wick. So it's pushed down and pushed back up, right? Or in this instance, pushed up into the breaker, right, over here. And then it was pushed back down, right? So we can expect at least to target the FVG in the next candle, right? Because we've smacked into a higher time frame liquidity pool, right? Smacking into it, rejecting off it. So we can expect some sort of retracement, right? And that is the framework. So weekly is telling me that we're going to go a bit high, right? You go to the 4 hour. We have here good old range theory, right? Range low, range high, and the mid-range, right? So what is the market profile saying over here? Go on, don't be shy.
Bullish
Why?
because of turtle soup and order block. Big beefy order block.
Big, beefy, juicy, thick candle stabbing into a liquidity pool, right? So we have a range, right? Range low, range high. We stabbed into the range low with this candle. So my eyes are on this candle, right? I'm looking at this one candle over here, this thick, bearish candle. You can also choose this breaker over here, right? Low, high, lower low, higher high, breaker, right? And this is a consolidation, right? So consolidation, expansion, retracement. Everyone is bullish down here, right? On NFP, if I'm not wrong, right? Because I don't pay much attention to the calendar when it comes to swing trading. But I believe this was NFP last Friday. Stab into this consolidation, right? And then continue higher. So we're breaking this high, breaking highs, rejecting lows, breaking highs, so we can expect to target this high at least. All right, that's almost a given. All right, so this was this for me is extreme high probability conditions. This is my bread, and this is my butter. Now, if I was you, I would note this down, right? Which is consolidation. Right, this is the consolidation. Whether it's an SMT, swing failure, or it's a turtle soup, right? As soon as the consolidation breaks out, the bottom's in, as you'll see right now. Right, so bottom's in. Now we're looking to smack back down into the consolidation. All right, smack back down into it, and then continue higher. This is the order block, right? Old low, candle smacking into old low, right? Why not this one? Why not this candle? Why not this candle? Anyone can answer? Why am I choosing these two candles? This and this.
They have the biggest body.
Exactly. So we want to focus on the big, beefy, thick candles, which are forced above a high or below a low, which is also seen here, right? Look at this. Look at this candle over here, right? A big, thick candle stabbing into a high, being broken, and then being used for them to mitigate their positions into this candle and away, right? Consolidation, expansion, retracement, expansion. Right, over here again, consolidation, expansion, retracement, and expansion, right? So we're bullish. Now we go down to the 1 hour, right? We have broken this high. Is this high broken or rejected? And why?
Broken because we closed above it with the speed and velocity.
Right, and we closed. What is speed and velocity? What does that mean?
Displacement, you see, it went way higher than the high.
We've closed multiple closes above the high, right? So when there's a low or high, when you close multiple times above it or below it, you're unlocking the high, right? So high, unlock the high, we're bullish. We're expecting to trade back below the high and then higher, right? Also, we are breaking through the 50% of the range, right? So we can expect a stab back into the 50% and then to the range highs, right? And if you have any questions, then you can ask right now or note them down, right? And here's a little curiosity, which is breakers leave gaps unfilled, right? That was something I had my eye on. Breaker over here, gap unfilled, right? But anyway.
So you'd use that to place the stop loss?
Yes.
On the gap?
Yes. Expecting to be a breakaway gap, right? So.
Okay.
Now, we're relying on this thick one candle to push us higher, right? This one long, thick candle, it is the one which you're expecting to push us higher, which is also a 4-hour order block, right? However, we also have the rule of buying low and selling high. And right here, we are high, right? So we're gonna wait at least till the candle's high, right, to look for a favorable reaction. We opened the week down here, right? So already it's showing signs of weakness, meaning this breaker is not going to be the exact reversal point, right? And we have this gap below here. And as you know, price moves for two reasons only, either to attack a high or a low, whether it's a wick or a body, or to rebalance an imbalance, right? So we go down into the imbalance, right? And this is where you should be bullish or not bearish, all right? So you mark the weekly open. Right? Buy below the candles open when bullish, and sell above the candles open when high, when bearish. Right? So we're smacking back down into it. And over here, on the 15-minute, we have a market maker model as well. Consolidation. And smart money reversal into a higher time frame PD array, right? Which is the 4-hour order blocks, 0.5%, right? Or 0.5 level. So now, what do we see here? What do you see here?
Structure shift.
What is this?
I was thinking it was a true breakout because we got multiple closes above the high.
That is correct. So we have, first of all, on the higher time frame, right, which is the 4-hour in this case, the 0.5% of the order block is being respected, yes or no? Right?
Yes.
So that's the higher time frame key level. All right. We're respecting this discount FVG. And by the way, if you eliminate all the FVGs and order blocks which are not discount and premium, then you will eliminate a lot of shitty trades. All right. That one, I would write it down if I was you. All right. So we have here again consolidation, expansion. Now, when you see this, you expect retracement and expansion. All right. And this was the trade idea that was birthed on Twitter. You got this. I'm relying on this FVG, right? Which is inside, and note this down, FVGs on the lower time frame inside order blocks on the higher time frame are high probability. All right? So FVG on the 1 hour inside of an order block on the 4 hour. All right? Leaves open a gap. And this was the idea given on Twitter, right? Right here. It looks easy in hindsight, huh? But in real time, it is not an easy task. Tell me what's up.
I have one question. What about time?
Time?
Yeah, because you took the trade at 1 p.m.
What
If I'm not mistaken.
what time exactly? Was it before or after 1 p.m.?
It was after, I think 1 p.m. If not mistaken.
It was after 1 p.m.? Oh, he vanished. So this was the trade idea, folks. Right? You got this here. So to filter the trades, we're below the weekly open into a higher time frame key level, consolidation, expansion, retracement, and expansion, right? And another thing is Mondays, right? Asking about time. Mondays are expected to be a choppy, volatile up and down day, right? So if you see a large movement on Monday, then you can expect a lot of that movement to be retraced, all right? You got this, and you got a beautiful, gorgeous reaction, right? A lot of challenges were passed. A lot of money was made. Of course, when I get it right, oh, thank you very much. Oh, we love you. When I get it wrong, then fuck you, right? That's how it goes. But this was a good one. This was a good one.
Romeo, may I
The
ask
question,
something?
yes.
This was a
Go
trade
ahead,
idea I
go.
wanted to go and look at, right? Now, any questions?
Yeah, I've got one. Because your stop loss was kind of large, like very low, and on a 1 hour time frame, there's like a little turtle soup.
My actual stop loss, right, was not this. Mine was a lot more conservative, right? But a lot more tight. However, when I give a trade out to others, I like to give them this large stop loss because so they don't get too excited and risk too much, right? Because when they see this large stop loss, then they become more wary of the risk. If I gave you my stop loss, you'd go all in, right?
Is your stop loss 1.05327? Yeah, right.
That was
there.
one of them. That was one. I had two entries, right? One was that, and the other one was a bit more risky, right? But yeah. And by the way, you're saying it's too large. Is it a 1 to 2? Yeah. Is it a 1 to 3? Almost. If you had taken this, the consolidation as the stop loss, which was what I was going to do in the beginning. But, I don't want to go and cause any drama with the market makers, right? So this was given out, which is pretty decent, right? Pretty decent. 1 to 2, 1 to 2.5. Yeah, so that was your idea. Any other questions?
Why was it the low of that candle? Is it because it's 25% of order block, or why was it the low?
This is a classic FVG stop loss, right? When you have an FVG entry, then the stop loss is going to be the FVG candles low, right? So it's either this, or it's the low itself over here, or it's the low of the consolidation, or if you're a bit more versed, then it's a lot tighter, right?
Could you
And
say
yes,
that
I know a
again?
lot of you would like to have the tighter stop loss, right? Which is mine, which was in fact, of course, looks easy in hindsight, but mine was a lot tighter than you can imagine, right? Sounds kind of weird, but yeah. Mine was, and if you look closely over here, using the same logic, right, you can tell where the stop loss would have been, right? And I will discuss a high risk to reward entry method in the upcoming live streams, right? One of my personal ones.
So my question is one of the reasons you Monday to have a large expansion or somewhat of a full retracement of the original Sunday move down because of Friday's price action?
No.
Nothing to do with that. Okay.
No. But taking price from the weekly open, right? Taking price from the weekly open, whatever happens from the weekly open, taking price from there with some logic, of course, as you've seen, back to at least the weekly open is a reasonable expectation to have, right? And apply that to any candle. Taking it from any candles open, whatever the Judas was from the beginning, at least you're going to have a retracement back to the weekly opening price or the candle opening price, right? That by itself is another model, right? And of course over here, everyone, all the over here, of course, all the Twitter ICT traders were short this breaker right here, right? I'm sure a bunch of you also stuck in this, right? Over here. But no, that is pattern trading. And if you shorted this, then, you know, quite frankly, you deserve it, right? Because we're not bearish on Euro. This is a fake breaker, right?
Is 1 o'clock one of your entry times? 1 p.m. What time do you search for trades in the PM session?
I've already said that, yeah, of course. It is. Now I'll discuss a common mistake right now, right? Which is getting stopped out again and again before it finally goes your way, right? So getting repeatedly stopped out, before it eventually goes your way. Why does this happen? It's either because you entered. No, it's either because you entered too early.
Timing.
With a tight stop loss, right? Yeah, that's pretty much the only reason it ever happens, right? Which is trying to get a large move with a one. You're trying to get a 1 to 100 risk reward, basically, right? Which can be done, but there is a logic behind it. And if you don't have that logic, then you're better off just trading the higher time frame candles themselves, right? 1 to 3. 1 to 4. 1 to 3 is excellent, by the way. 1 to 3. I'll post a graphic, right? But 1 to 3 is an excellent. If you have 1 to 3 and a 50% win rate, then you'll make money, right?
I have a question regarding to execution. Can you go to the 5 minutes, please?
Sure. Now see, Adam and Ibrahim, you guys were more advanced, huh? So try and make the questions more relevant to the beginners as well.
Okay, I answered the questions in the DMs. When I judge, I can answer them. Okay, so now when it hit the FVG, did you enter with the tight stop loss or after the CSD and then you up to the lot size?
Both. One of the entry methods, and this will probably fly over a lot of your heads, except a few. One of the entry methods is using the thrust candle as a stop loss. Now, what is a thrust candle?
Is it the first one that hit?
It's the candle that caused the change in the state of delivery, right? Now, in this instance, the thrust candle over here, for example, would be this one, right? This specific candle is the stop loss, right? Another one. This candle caused the market structure shift, yes or no? This one. This 9 o'clock candle, right? This is the stop loss, right? And that is a theory for you to back test, right? That is just one of my entry methods. Using the thrust candle, the candle that broke the market structure, right, as the stop loss, right?
Can you go to Tuesday? We had a turtle soup in London session. I used the same logic. It took the low, it displaced higher, but it came back and took the stop. It took the low.
You were being selfish. slash greedy.
I mean, I went to break even.
Now, for this, of course, it's hindsight because I was sleeping at this time, right? But where would you, now you're expecting this low to be turtle soup, right? This one over here. The 5 p.m. low, right?
Yes.
Now, what's your high time repeat array?
H4 FVG.
All right. There is none, is there? Yeah, very tight one. Sure. Good one. Right. Now, this is a range. Yes or no? Range low, range high.
Yes.
What are the rules of range trading when entering at an extremity? When you enter at the extremity of a range, right? What is the stop loss?
It's either a intermediate term high or a PDA, or you wait. Yeah, you discussed that in the method.
Or you do a 1, 2,
Or
3.
a blind entry. Yes, a 1, 2, 3. Yes, exactly.
Or a blind 1 to 3, right? That's also valid.
1 to 3.
Yeah.
Right? If your entry is based on this wickless FVG over here, right? Then your stop loss is going to be below the FVG's candle. Remember. Right? You always have to you have to leave some room for the market makers to breathe and gather their positions before expanding higher. Right? So let them take their time. Don't interrupt their process. Right?
And the reason you wouldn't put your stop under the other FVG's low is because of the breaker, correct?
That is correct. So we expect this candle, by the way, the stop loss is an FVG, right? First of all, it's the range. If it goes that low, right, then it's not that bullish, right? Over here. We want to see a shallow stop run because it's a strong trending market, right? And in strong uptrending markets, lows are left untraded too. That's a sign of strong trending markets, right? Over here, low, untraded. Smacks back up, right? So it's a strong trending market. We expect shallow stop runs, right? Smack into the low, accumulate, right? Scare everyone. We're bearish, right? I'm pretty sure some people sold this breaker, even amongst you, which should never be happening. Right here, pattern traders got wrecked, and yeah, that is why you leave this. We expect this FVG to be left untapped, right? Because of the breaker, which never got traded to, right?
But yes, but it did a mini displacement. It had no FVGs in it, but look, before the last tap,
here, right?
Yeah.
This is when the good old saying wicks, right? So what is it? Wicks do the
the damage.
And bodies tell the stories, right? It never closed twice below the FVG, did it? Below, above, below, above. It's finding it hard. Price is finding a hard time going below the FVG, right? So, yeah. Right at 3. Yep.
So is one of the reasons that you're more specifically bullish on euro because of the time that the liquidity pool was hit on the weekly chart or the monthly chart?
No.
I thought I was talking. So it closed into the range, which what you mentioned in the last video you made in the group. So is that an indication to go break even?
What do you mean? Over here?
Look, the multiple candles close into the range. You said it's an indication to
close below, close back above. Now, if you're going to go by that model alone, right, which I haven't given a name yet, right, but if you're going to go by that model, then I saw some. Was it Matt Don, the cranky guy? He was saying filter candle theory, right? Which is some
Bullshit.
I haven't seen it yet, but I know the person who
Yeah, who's a massive bullshitter.
exactly, right. That is that's not a very. He's not a reliable source, right? So as far as I'm concerned, that's bullshit, right? Close back in the range. Now, did it test the range low after closing back, Adam?
Yeah, it took me out.
No, it didn't. No. Did it test the range again? The rules of the model say close below, close back above, and smack back into the range, right?
In outside the range.
No. This is the range low. We close below the range, we're bearish. When we close back up, we're bullish. However, we expect a smack back into the range low, which happened.
Yeah, to re-enter, yes.
That is what took you out.
Yeah.
Right?
Yes.
So yeah, that's it. Also, always pay attention to the closes, right? 0.5, the closes of the order blocks. If it closes twice below the 50% of an order block, then there's an 80% chance it goes to the low, right?
My takeaway was it. I mean, we have a pretty gay week. I mean, CPI, FOMC. That was one of the reasons that I say it is what it is. And I mean, it's expected gayness, if I may say.
Yes, but this seems pretty, like, in hindsight, of course, it seems pretty obvious, but even applying the most basic range entry, right, which is this, which is by itself a model you can live on, right, which is this, even that says your stop was too tight, Adam, right?
Your iPad's going to die, by the way. It's at 2%.
That is correct, and the live stream is over anyway, right? I hope you found that insightful. That was a fun trade to call out and trade. It was gorgeous, right? I'm done for October, right? However, if I see anything else interesting, then I will point it out. Of course, as we know, the draw on liquidity for dollar, the draw on liquidity for the DXY remains up here for now, right?
Also, last week you mentioned it will tap into the 2-week breaker or the monthly breaker, but you said trade idea done. So you're expecting choppiness, or you just abandoned that idea?
The trade idea is done, meaning I'm buying the dollar, right? Dollar.
So you will stop being bullish for euro.
I'm expecting chop, right? Bullish, I don't know. But this low is the key, right? On dollar, this is the key low. So we have the draw on liquidity, right? And we have the key low, right? The expectation is to turtle soup this low and attack that high, right? However, how shallow the stop run is, that we will see in the upcoming days, right? The last time I had touched the dollar was down here, if you remember, right here, in this candle for turtle soup. That is the last I saw of it.
So no more bullishness for euro as dollar hit that low.
I'm neutral. If you want to go trade, go ahead and trade. For me,
yeah,
okay. I caught the meat of the move, right? For me, it was caught. Was, in fact, I've been catching on euro. I caught this low over here. I caught this high. I caught this low. Not this one, right? I caught this low. Right, so I'm this range is playing out pretty good, but for now I'm letting this range I'm letting it be, right? Whether there's a real breakout that happens or not, I don't know.
So the analyst in you is telling you to sit down, or is it just the trader because you already made money and you will sit out? What part of you is it? Both of them telling you to sit down?
Both are saying, the analyst is saying there's going to be chop, right? Up and down movements, volatility, right? We're expecting volatility. Bearing in mind that the higher time frame, the drawn liquidity is going to be this this high up here, right? The drawn liquidity is going to be this high up here for dollar. All right. So yeah, that pretty much sums it up. The higher time frame key level, I think there was a weekly FVG up here, right? From there, you can expect.
A guy is asking you if he can talk. His name is Austin. He wants to ask about the 159 H4 candles and QT stuff. I didn't understand the question, but he's asking to talk.
Quickly, because it's 1%, and you're the last questions, Austin and Elizabeth. Go on.
Yes, good day. My question is, you said that the 4 hour 159 are important, right?
Right.
Could you base that off of a QT, a quarterly period, on the 4 hour chart, so that for example, if QX is a large range, wait until no, not QX. If quarter 1 is X, right, a large range, we can use quarter 2 to consolidate, and then quarter 3 to
I haven't studied Day's theory, right? I know Day. I like Day. He has good content, and he's a good trader and analyst, right? However, I haven't studied his theory, so I don't know. What I'm expecting is consolidation, expansion. That's it, right? Small candles, large candles. When there's a lot of chop, and on Twitter everyone's saying, "Oh, it's going to be like this forever," right? It's getting boring, right? The horrible price action, right? And drawing the heartbeat diagram, right? You know the meme they do during commodity markets. When I see that, then I expect manipulation, right?
Oh, okay.
Small candles, manipulation, large candles. That's it. Happening within those periods of time, right? Monday, Tuesday, 159, week 1, week 2, and so on. Even the yearly chart. Same thing.
But even so, normally Monday, Tuesday, Wednesday, you'd look for an AMD in that session, right?
That is correct.
And prices fractal, right? So even if we say we're going to use the 159, could you use that same idea on it?
Yes, you can.
Okay, all right, that's it. Thanks.
All right, folks, the questions are over, right? I will see you all in the next one. It was longer than I expected, right? And my apologies for being late, right? Of course, Mad Dawn is crying all the time. And when the stream is here, he's not here. Very nice. But anyway, there's a stream, folks. Hope you enjoyed it. And there was some good stuff shared. Study it well, and good luck, and good trading. See you this weekend.
Take care.